So one of the first key concepts that we need to keep in mind with trading is the concept of buying low and selling high. Ideally, you know, the key thing we're trying to do here is buy something when it's cheap and sell it when it becomes more expensive. So an easy example is you've got a car, it's a vintage car, I don't know, it's a BMW E30 or whatever, I forget what they're called. You know, the vintage, really, really cool BMW cars. You bought it for $2,000, you're selling it for $6,000. That's a 3 times return. If you bought 10 of them, you would have spent $20,000 and you would get $60,000. So you can start to see how the concept here is we want to buy low and sell high. Very, very simple. And in reality, it's relatively simple as well if you're doing things in a healthy way, but people tend to overcomplicate it. One of the key ways that I like to give myself an advantage where I can buy something that I think is going to go up in value before everyone else thinks that is I will carry out technical analysis on the charts. So if I switch over to my screen now, you can see right here how we have some pretty cool charts right here, and really all I'm trying to do is read these charts and analyze these charts to understand what's going on with the price and how I can put myself in the best position to understand what's going on here. So by the end of this video, you're going to know everything about what's on the screen, but let's switch it right back to this for now. We are talking about the concept of buying low and selling high. Charts are one of the key ways we can achieve that, and if you are a short-term regular trader in the market, it's one of the only things you can go off, because there's only 2 forms of analysis you can do in these markets. Number one, you can carry out fundamental analysis, which means research on the asset. You know, you think Tesla's going to go up because it's got a strong CEO, it's got a strong product, a very loyal fan base. That's fundamental analysis. You think Bitcoin will go up because it's mathematical, it goes against governments, it's deflation. That's fundamental. You can only do that once. And then there's technical analysis. This is where the picture changes every single day. There's a new chart to analyze every day. There's new data, there's psychology you can analyze, and you can really weaponize that to make these gains really very quickly. And it's very, very important to be able to do that, because as short-term traders here who are trying to turn small amounts into large amounts, we need to be able to make those profits quickly and consistently. We need to be able to make those profits quickly and consistently so that we can apply that beauty of compounding interest on our bankroll. So, you know, Bitcoin could go from here at its current price is about $50,000. Bitcoin could go from here to $500,000, and that would be a 10 times return on investment, which is absolutely spectacular. Very, very good. However, if you're playing with $20,000, that's only going to give you $200,000. If you're playing with $2,000, that's only going to give you $20,000. So the return on investment is not great as it is if you're trying to turn small amounts into large amounts. If you already have large amounts, then you're not watching this video because you're just investing your money and doing the boring stuff. You don't need more money. This is about wealth creation. This is about creating wealth basically out of thin air. That's what we're trying to do with trading. And that means whatever moves we see in the market, we need to do better. You know, just buying Bitcoin and holding Bitcoin and waiting for it to do a 10x isn't going to make you a millionaire unless you're playing with at least $100,000 to start. And most of you are not. And so what we need to do here is aim for those bigger gains by applying things like leverage, which I'll go into a little bit later. If you're not comfortable using leverage, that's completely fine, but I'll explain to you what it is and how it works and why I love it. And as we go on, I am going to be showing you my chart on screen and different things like that. So all the links to everything I'm using will be in the description. The TradingView application where I actually look at the charts, the exchanges I use, literally everything you might want or need will be in the description. You don't need to use those links if you don't want to, but they will give you special bonuses. You can just Google whatever I've mentioned as well. You can find your own links or your own alternatives. So I want to show you a little bit of what this looks like on a chart and how we can actually apply this analysis in the real world, and then kind of expect where these moves might come up in the market. So let's switch right back to my screen here. So with this chart on Bitcoin, I'm actually going to take a fresh chart. And once again, like I said, this is all going to be in the description for you. So, you know, if you want to follow this along as I'm doing it, you can definitely do that. And what we have on this chart right here is the price of Bitcoin according to the one-day chart now. So it's worth noting, first of all, that each of these individual bars that you see on the chart, you know, like each of these You know, it doesn't matter what color they are. Every individual bar that you see on the charts is called a candle. Candles are very, very important to understand, and there's a lot that goes into them, but we're not going to go into that today because, like I said, this is going to cover the basics. It's just going to give you what you need to start, and from there, if you want to learn it, you can Google it. Of course, we have our own resources. We've got our 𝗧𝗙𝗧𝗏𝗧 Academy course, which goes into very, very minute detail about each of these things. You'll know absolutely everything from A to Z in there. But what I want to show you is a quick, easy example of how we can apply some analysis to the market now, and actually going back a little bit, because what we had right here, what I want to highlight to you right here was the price of Bitcoin. Looking at the bottom, you can see the date, right? So you can see the date around over here. We had the price of Bitcoin at roughly June 2017, maxing out at $3,000. Right here, you can see that the price topped out at $3,000. So it took, I don't know, from the beginning of 2017, Bitcoin was at $1,000. It took about 6 months to reach $3,000, and from there Bitcoin crashed down massively until it fell down to 1850. So that was a pretty steep correction. Off memory, that was something like a 35% drop. That was 36%, so pretty accurate. It was about a 36% drop when we peaked over here, and then we made a really big run up. And this is very important because by having the price max out over here, we did something called establishing resistance. So there are two key concepts in these trading markets. There's support and resistance, and both of them are very, very important in allowing you to potentially look for areas where the price can get rejected from, the price can go down, or where the price can bounce up from. So those of you who already know a little bit about analysis now, you know what I'm about to say next. But with resistance, what we tend to see is that if we establish resistance over here and the price gets rejected, if in the future we end up trading above this resistance area, which we did, we ended up trading above this resistance area over here, then old areas of resistance become new areas of support. So let me declutter the chart and say that again. We established resistance at the $3,000 range, and we know that because as soon as we hit 3,000, just look at the right hand side over here, it'll tell you the price. As soon as we hit 3,000, bam, big sell-off, really big sell-off. There was clear resistance over here. However, when we rose above this level and we came back down, the price stopped falling at the previous area of resistance. Let's break this down again. So we got rejected at the $3,000 area and established resistance. And when we fell down, we used the old resistance area of $3,000 as a new area of support. And it triggered a very strong bounce. In fact, we never fell down to this level ever since that point. It took about, I don't know, a day to rise up by 30%, which was very, very impressive. But what's more impressive is like I just said, we have never come back down to this price level. And this was nearly 4 years ago. So old areas of resistance tend to turn into new areas of support. And I did jump a few steps right there. So let's break down with a little bit more detail what support is. It's probably easier if I play the chart back from a different point. And really, you know, just use some basic tools to illustrate where you might be able to find some of these support areas. I think a good support area to highlight would be the $6,000 area right here. So let's take my box tool. I'm just drawing a box between $5,700 and $7,000. This box is probably a little bit too wide, so I can manipulate it a little bit. And now I've shortened this box, and you can see quite clearly on this chart now what I've done is I've drawn a support area. This is an area where the price tends to fall down to and then bounce off continuously. Very, very important. We formed support here, and the price is bouncing off this blue box, which is absolutely great. The reason this is useful is if you know where a support level is, you can start to predict where the market might bounce, which might give you a good entry. For example, if we replay the chart and we look at the market from this point, there is now enough data on this chart to draw this blue box that I've drawn here. As you can see right here, we established resistance. Look at this. If I zoom all the way right back in, we established resistance at the $6,000 level right here. You can see that very clearly. We hit the all-time high, got rejected, fell down. Afterwards, we broke above, we fell back down to this level, and we turned an old level of resistance into a new area of support. We can see that it's support because we bounced off this level very, very well. That tells us a lot about this area. And the reason I'm saying we can draw this box is because since that point, the price fell down to this box again once, and then nearly fell into the box twice. We don't need exact touches. Analysis is subjective. It's fine. We don't need exact touches. This is close enough. We fell down to this point over here. So now we've got a total of 1, 2, 3 instances of finding support on this blue box. 3 times is enough to draw a box. In fact, technically just 2 is enough. You can draw boxes, you can draw lines. I can draw a line right here. Again, I'm not going to show you too much about these tools because that's not what this video is about, but we do have a TradingView tutorial, which you can find by clicking the I in the top right. I believe that's the top right, or in the description, you'll see our tutorials on that, which are part of our 𝗬𝗢𝗥𝗙𝗦 Academy courses. But this was a beautiful test of support, and now we can start to expect that support is there. So what do the smart people start doing? The smart people start trying to buy Bitcoin every time the price falls into this area. They would do this by applying orders on exchanges, which I will also show you a little bit about and walk you through how it works. But for now, if you want to get started and watch this stuff along with the video, I would recommend that you pause the video and sign up to some exchanges so that you have it ready when you want to start. I've got the links to the 3 exchanges that I use in the description, and you can follow that link and get some bonuses when you start. But what they will do is set some buy orders around this area. They will try to buy Bitcoin if Bitcoin falls down to this area. And if we play the chart forward now, we can see quite clearly that when we end up topping out at about $10,000, we fall all the way back down into this box, and then we bounce up again. So everyone who had orders set over here, obviously the orders keep going on through time. Unless you cancel the order is going to stay there forever. Everyone who set their order at this price level would have had a very good entry level on Bitcoin. Bitcoin would have fallen down to $6,000. You would have previously identified that there is some support to expect in this range, and as a result, we might end up rising higher. And because you've done that, you've now entered a position on Bitcoin where it started to rally upwards. We come back to a problem now, though. See, the problem here is that if we zoom in, and we measure this move. I'm using my ruler tool. Again, you won't know where these tools are. It's not a problem. If we measure this move with the ruler tool, Bitcoin from the low up to the high goes up by 46%. And that's not much. That's not a very big move. This is where it gets concerning. You see, it takes a lot of effort to plan a move like this and to sell it at the top. And this is assuming that you buy Bitcoin right at the bottom and you sell it right at the top. Realistically, you might buy it somewhere in the middle, you might sell it over here. You know, I don't know. It depends on how good of a trader you are. It depends on luck. It depends on a lot. But 18% profit here in this example, between 18 and 46% profit. Let's say that's a reasonable range. That's not a lot of money. If you're playing with $10,000, 10K would turn into 15K at best. You know, in a more realistic example, I don't know, $1,000 might turn into 1,200. You can see how that's not very exciting. It's not very useful. You know, it's great. It's extra money. I mean, 10K to 15K is enough to, you know, buy a car or repair a car. With that 5,000 profit, you can pay off a lot of bills. But again, we're not talking about that. We're talking about Ferrari money. We're talking about yacht money. I mean, obviously it's super unrealistic. Most people won't get it, but this is what we're aiming for. And so how do we turn a very boring move like that into something much more fruitful? And the way we do that is by applying leverage. With a move on leverage, let's say I applied 5 times leverage, and bear with me because this is going to get a little bit complicated now for a few minutes. If I applied 5 times leverage, that would mean I would be taking on 5 times the risk on my trade, but I would stand to gain 5 times the reward as well. So if the price goes up by 5%, I would make 25%. And the way this works is exactly like a mortgage. If I'm buying a house for $100,000, and I'm only putting a 20% down payment, let's say to make it easy, I'm only putting in a 10% down payment, and then the house rises in value by 10%, that means my $100,000, my $100,000 house has turned into a $110,000 house. It's gone up by 10%, but I only put $10,000 in. So I've just profited $10,000 on a $10,000 position. And that means I've doubled my money. So that's what we're doing when we're applying, when we're applying leverage with a mortgage. That's what a mortgage is, and that's exactly how leverage works in these markets. Fortunately, it's not like you need a good credit score or anything like that. There is no such thing as credit scores. The exchanges back up their own money, and there is a whole process that I can explain, but not for this video. It's not very technical at all in order to use that money to leverage your positions, and it's very easy to access. That's where this starts to become more interesting, because if you are working with, for example, a modest 18, let's say 20% rise, and you've applied 5 times leverage, all of a sudden, a 20% rise becomes a 100% profit, because the market moved up by 20%, but you've applied 5 times leverage, which means you're multiplying that by 5. So you stand to gain plus 100%, and doing the math, very, very simple. I don't know, $10,000 times 100% plus 100% is you made 10K. Just to break down this math for you, it is quite simple again, but I think it's worth using a website called Percentage Change. They say that you shouldn't use this for finance, but everyone will. And actually, the way you find it is by typing in percent-change.com. I will leave this linked in the description for you as well. But very simply, all you would do here is, let's say I put in, well, actually, let's calculate the price of Bitcoin. Let's say I bought Bitcoin at $6,000. That means I entered at $6,000, and I sold Bitcoin at, let's say, $7,000. So it's a $1,000 move. It's, I don't know, 15% profit. Let's calculate it. 6,000 to 7,000 is a 16% change. I would multiply this number by 5, because in this example, I've selected 5 times leverage, and I would stand to make whatever 16 times 5 is. I don't know, I'm terrible at math, and that's another thing that you'll be glad to find out about. You don't need to be good at math to be good to be a good trader. I dropped out of school, like that. That's how little an education is worth in the game of trading, which is also one of the beauties of it. But whatever 16 times 5 is, I still can't do the math even as I speak, but it's probably around, I don't know, 70% profit. In fact, we can Google it. So 16 times 5 is an 80% profit. So pretty good gain. And that's where, now if you are trading with $10,000, a very boring $2,000 profit, because it's 20%, or in this case it's 16%. So a 16% profit on 10,000. Well, we can throw it back in the calculator. 10,000 multiplied by 1.16, because that's 16%, gives you 11,600. A very boring profit like that turns into $10,000 multiplied by 1.80, I guess. You've got $18,000. So just because you've applied 5 times leverage, you've nearly doubled your initial starting capital with 1 trade. And the idea is that you rinse, repeat this, and do it over and over and over. So I'm going to come right back and explain a little bit more about the mechanics of leverage and how we can apply more analysis in the charts as well. Hope this is all sticking well with you so far. And if you have any questions, please write them down, put them in the comments, and I will get back to you as soon as I can. Cheers.